Impossible Foods beefed up its roster of meat alternatives.
It's a burger that's become quite popular.
Now the meatless craze sweeping through grocery stores, restaurants, even down the street at Carl's Jr.
Despite the buzz around plant-based alternatives and vegan recipes, Americans still love meat. In 2018, Americans consumed more than 180 pounds of beef, pork, and poultry, 10% more than in 1970. Plant-based meat retail sales were $760 million in 2019, a fraction of the total meat and poultry sales. Whether it's at your favorite fast food restaurant or in the grocery aisle, one company that carnivores turn to again and again is Tyson Foods. Tyson Foods is one of the world's largest food companies and produces roughly 20% of the beef, pork, and chicken in the U.S. It services restaurants and schools and sells brands like Jimmy Dean and Sara Lee in supermarkets. But in the spring of 2020, restaurants closed as governments enforced social distancing rules, and in April, thousands of infected Tyson workers at processing plants caused facilities to shut down, causing meat shortages at grocery stores across the country. The 85-year-old food giant faced the perfect storm: higher production costs, lower levels of productivity, and softer demand.
We've implemented a wide number of measures to look after our workers, from measuring temperatures as they come through the door, face coverings, staggered breaks, expanded room, social distancing. All of these are designed to help keep our workers safe. Keeping our workers safe is what will keep our plants running. And of course, where necessary, we've been willing to close those plants and to deep clean them in order to make sure that we can get back to speed as quickly as possible.
But analysts argue that after decades of industry consolidation, some of Tyson's problems may have been self-inflicted.
COVID-19 has exposed weaknesses in the meat system that people have been talking about for years, but that have never been exposed as they were now. And essentially what COVID-19 showed was the profound fragility that happens when you move all of your production into as few slaughterhouses as possible.
So can one of America's biggest meat suppliers recover from the devastating blows of 2020? Or has the COVID-19 crisis created an opening for rivals JBS, Cargill, and Smithfield Foods to overtake them? In the early 1930s, 25-year-old John Tyson left his family's farm in Missouri in search of a better life. The Great Depression meant jobs were scarce, but after arriving in Arkansas, Tyson saw opportunity all around him in the form of chickens. Chicken was a delicacy in Midwestern cities at the time, so Tyson loaded up his truck and started hauling birds to markets as far away as Chicago and Kansas City. By 1947, Tyson was not only transporting the chickens to market, but also selling baby chicks and feed to farmers.
Tyson Foods was at the forefront of the revolution in vertically integrating meat production. And it's not like you can go back in time and point at one person as being the, quote, inventor of vertically integrated meat production, but if you would, John Tyson Sr. would be really close.
But it was Tyson's son, Don, who many credit with turning a simple chicken business into a global empire. Don joined the company after dropping out of college in 1952, built the company's first processing plant, and became CEO in 1967 after the death of his parents in a car train accident. In 1963, Tyson went public, selling 100,000 shares at $10.50 each. By the 1970s, there was an explosion of industrialized, vertically integrated poultry production in the U.S., with about 36 companies controlling half of the chicken market, including Pilgrim's Pride, Sanderson Farms, Purdue Farms, and of course, Tyson.
Chicken was really the first animal that was produced like a widget on an industrial assembly line. And so the amount of chicken that was available just exploded during this time.
By the late 70s, Tyson was producing over 230 million birds per year, and with a grow-or-die philosophy, Don Tyson's company started acquiring competitors and expanding the family business.
Starting in about 1980, you see this enormous wave of consolidation sweep across the industry, where a handful of companies who had really good relationships with investors on Wall Street, where they could raise the capital to go on a merger spree, with Tyson Foods being probably the premier company in this way, they went out and bought their competitors and they rolled up ownership into a handful of firms.
By the mid-'80s, Tyson reached $1 billion in sales and claimed the number one poultry producing slot in the country. The company went on a buying spree. In 1989, Tyson bought Holly Farms for $1.5 billion, doubling the size of the company. And in 2001, it bought IBP for $3.2 billion, making it one of the world's largest meat producers and processors.
Tyson made a business model out of buying out its competitors and shutting down the older, smaller slaughterhouses and moving more and more production into a handful of very large, highly sophisticated slaughterhouses where they could add value to the product.
In 2014, Tyson bought Hillshire Brands for $7.7 billion. And in a bid to boost its sales at restaurants, in 2018, Tyson bought McDonald's chicken nugget supplier Keystone Foods for $2.1 billion. In 2019, Tyson had net income of $2 billion, a 66% increase from 2015. And by June 2020, Tyson had a market value of $21 billion, almost double the amount it had at the start of 2014. The meat and poultry business in the U.S. is a $232 billion market, according to IBIS World. In 2017 alone, the industry processed 9 billion chickens, 121 million pigs, and more than 32 million cows for kitchen tables across the U.S. While the scale is hard to comprehend, industry consolidation has led to just a few key players. The four biggest companies, Tyson Foods, JBS, Cargill, and Smithfield Foods, control anywhere from about 40 to 60% of supply, depending on the type of animal. Volatile commodity prices keep profit margins tight, forcing Tyson and other meat processors to keep a close eye on costs. Tyson has more than 200 plants in the U.S. and had global sales of $42.4 billion in 2019. About a third of revenue came from the sale of beef. Another third came from the sale of chicken, and the remainder of the company's revenue came from pork, prepared foods, and international sales. The company sells about 45% of its products to retailers like supermarkets, 31% to food service businesses like restaurants, and about 11% to packaged food companies. The remainder of revenue comes from exports. Tyson is the largest chicken producer in the U.S., followed by Pilgrim's Pride. Pilgrim's has more than 30 plants in the U.S. and processed about 1.7 billion birds in 2019. The U.S. poultry industry has come under increased scrutiny in recent years as consumers and grocery stores have accused Tyson Foods, Pilgrim's Pride, and other processors of inflating the price of chickens. In June 2020, Pilgrim's CEO Jason Penn, along with other chicken industry executives, including Claxton Poultry Farms president Mikhail Fries, were indicted for conspiring to fix prices on broiler chickens from 2012 through 2017. In a statement, Pilgrim's said the company is committed to high ethical standards, governance, and free and open competition that benefits both customers and consumers. Tyson was not named in the indictment, but a few weeks later said it was cooperating with the U.S. Department of Justice on a price-fixing investigation that could shield the company from criminal prosecution. Pilgrim's is majority-owned by Greeley, Colorado-based JBS, which is also one of the world's largest beef and pork processing companies, and a subsidiary of Brazilian-based JBS SA.
So chicken is ground zero, if you will, for this model of vertical integration and consolidation. It happened fastest and most dramatically in the chicken business. Well, then these companies realized what a huge opportunity this was, so they essentially exported that model to beef and pork.
The beef category is also dominated by a handful of companies. At the top of the pack, alongside Tyson and JBS, is Cargill, a private company that has more than 3 dozen processing plants in North America.
So a typical plant shift at, say, a pork or a beef or even a poultry packing plant might have 800 to 1,000 workers or more on a given shift. And they typically are close. It oftentimes is challenging to have 6 feet of social distancing.
In 2019, Cargill had revenue of $113.5 billion. In the pork category, the biggest producers are Smithfield Foods, JBS, and Tyson Foods. The world's largest pork producer, Smithfield Foods, started operations in 1936. The company grew rapidly with more than 30 acquisitions since 1981. In 2013, Smithfield was bought by Hong Kong-based WH Group for $4.7 billion. WH Group is publicly traded on the Hong Kong Stock Exchange. But while supermarkets were seeing shortages and higher prices in 2020, China was receiving a record amount of pork exports from U.S. companies. In June 2020, Democratic Senators Elizabeth Warren and Cory Booker sent a letter to chief executives of Tyson, Cargill, Smithfield, and JBS, criticizing them for exporting pork and other meats to China while threatening the American public with impending shortages. Tyson told CNBC in a statement, "In recent months, we've prioritized supplying meat to the U.S. domestic market and have voluntarily curtailed shipping those pork export items that are also used by domestic consumers to try to meet U.S. demand." The coronavirus pandemic hit Tyson with two major crises. With consumers eating more meals at home due to restaurant closures, Tyson faced a shift in demand from food service to retail.
Well, certainly we saw a pretty big fall-off in food services as schools and restaurants were closed. But at the end of the day, people are not resigned to eating less. And so you saw a big spike in retail. For our company, that works out to be net negative because not all of the plants can be switched over to produce food for retail. But we've certainly been very successful in a number of them.
As the world economy began to shut down in March 2020, Tyson stock fell to a more than one-year low of $44.
It definitely was disruptive to their business, but for the most part, they were able to ship those products over to the retail channel, which was experiencing unprecedented demand.
But the second crisis had far bigger implications for the company, as well as the entire food supply network. According to the CDC, during the spring of 2020, more than 16,000 U.S. employees from Tyson and other companies working at meat and poultry processing plants across the country contracted COVID-19 and 86 died, forcing about 24 plants to close. Meat processing employees often work in tight quarters on high-speed lines that place them at greater risk of contracting or spreading COVID-19.
Meat processing is a very labor-intensive process, so you have employees standing in close proximity to each other, which really made it very difficult to control the disease. So several meat processing plants had outbreaks.
The Midwest Center for Investigative Reporting said the numbers were much more grim. It said, as of July 17, 2020, at least 33,000 U.S. workers at meat processing plants have been infected and at least 133 have died. The group said workers at more than 40 Tyson plants have been infected and at least 12 plants have temporarily closed. In May 2020, 40% of workers at a Tyson Foods pork processing plant in Indiana tested positive for COVID-19. The plant temporarily halted operations on April 25th. At a pork processing plant in Iowa, more than 1,000 workers were infected with the virus that same month, according to county health officials.
Tyson and other companies have been working as hard as they can for decades to put as much production into as few slaughterhouses and then to cram as many employees as possible into as little space in those slaughterhouses so that they can process as many animals as possible, as quickly as possible, to pay off the investment of these really sophisticated mega slaughterhouses.
For Tyson, plant closures meant shrinking output plus an increase in operating costs to ensure new safety protocols. Tyson deployed infrared body temperature scanners at some U.S. sites and plastic dividers to protect workers. But for those employees who didn't feel comfortable returning to work in June 2020, the company wasn't giving out sick days. According to news reports, Tyson doesn't have paid sick leave, but offers short-term disability coverage for employees who are ill. CNBC reached out to Tyson Foods, but they did not respond to a request for an interview. Plant closures had a ripple effect across other parts of the supply chain too. With Tyson's U.S. hog processing capacity nearly cut in half, farmers who were struggling to find a buyer were now forced to euthanize excess animals. Due to supply chain issues, more than 10 million pigs will need to be culled, according to the National Pork Producers Council.
If you consider the plants in the industry that have already been closed, and you look at the public data from our USDA, you will see that pork and beef processing are down somewhere between 20 and 30%.
In April 2020, Tyson chairman John Tyson took out a full-page newspaper ad that said the food supply chain is breaking. Days later, President Trump invoked the Defense Production Act, ordering meat packing plants to remain open.
We didn't have widespread massive meat shortages, but we did have an interruption in the supply chain and a product-by-product level of shortage. But what that did is for the first time, it really brought Americans face to face with the reality of the industrialized meat system that we depend on every day for our food. There really has never been a shortage like this in modern times.
In May 2020, Tyson reported its fiscal second quarter net income had fallen 15% from a year earlier. With the coronavirus wreaking havoc on U.S. processing plants, Tyson might be looking to the horizon for its next generation of consumers. During a November 2019 earnings call, Tyson CEO Noel White said about 90% of future growth in the global protein demand could take place outside of the U.S. Since 2018, China, the world's top pork producer, has killed millions of pigs as it battled African swine fever. During a February conference call with Analysts, White said Tyson had year-over-year increases of nearly 600% to China in the first quarter of 2020. China has also seen a surge of U.S. poultry imports since the country ended an almost 5-year ban on the trade in November 2019.
China just in November eliminated their ban on U.S. chicken. So, we expect to see a lot more chicken heading over to China. And just pork in general, as the Chinese are large consumers of pork, and now they have a significant shortage. So we do think that Tyson will benefit from that over the long term.
The company is expanding into markets at home too. While the number of vegan and vegetarians in the U.S. over the past decade has remained flat, the interest in plant-based foods is on the rise. Consumption of plant-based foods also took off during the pandemic as consumers continued to adopt healthier diets while facing shortages of meat at grocery stores. Tyson, once an investor in Beyond Meat, launched its first plant-based product in 2019. In June of that year, the company rolled out chickenless chicken nuggets in a blended burger that combines plants and beef. But despite these new markets, analysts think Tyson's structural problems could come back to haunt them.
There's a strong chance that we're not out of the woods on this yet. The virus is still spreading. The number of cases inside slaughterhouses continues to rise. The companies are not being forthcoming about how many of their employees have this virus. And you could see how the companies might need to continue selective shutdowns of plants going through this summer, and God forbid if we have a second wave this autumn or this fall. The supply chain issue is going to remain, I think, front and center for a lot of American consumers.